As Carolyn Jenkins told the Business a few weeks ago, she's battling both a serious illness and an insurer refusing to pay out on her superannuation policy's total and permanent disability cover.
They don't really see that there's a person behind that decision. It's just, oh well, we'll just stamp it and no.
Carolyn Jenkins is one of around 500,000 Australians with a TPD policy which may be a waste of money. Policies that come with what's known as the Activities of Daily Living test, with hurdles so high nearly 2/3 of applications are rejected.
These people are paying for premiums for basically junk insurance, and these premiums are reducing their superannuation savings.
And that raises the role of trustees of superannuation funds. By law, they're required to act in the best interests of their fund's members, and that, you would think, would mean they make sure that insurance products they effectively force on people over the age of 25 actually work.
They should never agree to enter a policy that has ADL in it, because that's clearly not in the best interest of its members.
ASIC has singled out Westpac and Asteron, which used to be Suncorp, as two companies with the highest decline rates. Consumer Group Choice says AMP and Aon also figure prominently, as do not-for-profits like Intrust, Labour Union Cooperative and Public Sector Super. Superannuation trustees not doing their job was front and centre at the Banking Royal Commission in 2018.
It was particularly acute where the superannuation fund was engaging in insurance arrangements with its own corporate affiliate, that is, its own in-house insurance arm.
In other words, cross-selling products, and that's exactly what happened to Carolyn Jenkins, MLC Super and MLC Insurance. Royal Commissioner Kenneth Hayne summed up that type of integration like this: the entity's motivation will usually be to increase market share, to increase revenue, to increase profit, to place commercial pressure on its competitors, or some combination of those factors. All the big banks and AMP have owned insurance companies, and even though some have sold out, they still have very close relationships.
Insurance company A will always go with the superannuation fund for which it's economically tied with, so maybe the parent company or wherever.
Superannuation trustees say they've heard the message, but despite that, 2 years on from the Royal Commission, hundreds of millions of dollars in junk insurance is still being sold.
The superannuation funds are taking this very seriously and looking at changing. So there are a lot of funds who are in the process of renegotiating their insurance contracts.
Superannuation trustees are expected to be back in the spotlight with an expected rise in mental health issues caused by COVID-19. For nearly 500,000 people, though, a TPD claim resulting from that could show their cover to be worthless.
People who have mental illness solely as a reason for them being totally disabled have no chance because of the activities of daily living requirements.
Carl McKell says in many cases, trustees don't ask the hard questions of insurers to protect the interests of members. But trustees say it's members who should be asking the questions.
You can have all of the warnings on the website or in the documentation that you like, but people still need to engage.
ASIC is watching, though, and says the onus is on trustees to put an end to the insurance gravy train that doesn't deliver.